Lots going on here, guys. What's going on? Lots of trades to look at today. This is going to be fun. Only you. Okay, guys, what's going on, everyone? I'm just getting set up here. Just give me 30 seconds and we'll hop right into it. Okay. Like to post it on our stock twits. Try and get some more people in here. Trying to grow a little community here where we can break down trades every morning together. So if you guys have anything that you'd like to recommend for me to look at, I'm basically going to be using my data terminal and a little bit of fundamental research to give my opinion on what's happening around earnings events. What are good ways to structure trades using options to take advantage of things. So just to introduce myself, my name's Sean. I'm the co-founder of Predicting Alpha, and our mission is basically to bring data-driven trading to the retail community. So if you guys have anything that you want us to look at, leave a comment in the chat box. I'll get to it. But if not, I'm just going to be breaking down trades that I think are interesting. We're right in the middle of earnings season, so there's a million things on the go right now. One of the great things that I do here when I come in, the way I start off looking for trades is I filter by date. So I have a little scanner here where I look at 1,400 different stocks. So I'll scan by date and time to look at like today's after hours earnings. And then I have a bunch of different factors that I'll filter by to sort of try and find trades. And what I'm going to be doing today is filtering by implied versus realized earnings. So what this is doing is I'm looking at the implied move. So this is if we were to actually strip out what the market thinks the move is going to be for this earnings event, this is it right here. So we're looking at Fitbit right now, and the market is implying a 3.25% move for their earnings event. It's saying here, so I have this number here. This is the earnings date. It says it's not confirmed. Guys, do you know if this event is confirmed or not? It sometimes takes a little bit for it to update if it only came out in the investors relations section. But what I'm seeing right now, the reason why I wanted to look at this is the average move is 11%. So there's no move implied, which, makes me think that either this date got moved or it's a really good trading opportunity. If the date is confirmed for tomorrow, if someone can confirm that for me, that'd be really good, because this is a good trading opportunity if the date is tomorrow, right? We could buy a straddle and probably capture a really nice gain if the earnings does release tonight, because we're paying a pretty cheap premium for those options. They're implying a really small move. So if we buy a position at market close today, sell it at market open tomorrow, our premium will be pretty cheap relative to the move we can expect. Now, historically, it's not been very profitable to buy options around Fitbit, but this event is looking really interesting if we can actually confirm that it's for tomorrow. But if not, until we get that confirmation, I'm going to move on to something else, something with a little more confirmation around it. Today, I'm trying to focus on long vol plays because I know a lot of the guys that are coming in here, they're in a position where they're trying to buy options, not sell them. So I want to give as much value as I can here. So I'm looking at option trades where you can actually be buying these options. So let's see here. QGen has earnings confirmed for tomorrow. Perfect. And what do we got here? Implied move 2.52. Average move is 4.1. So yeah, look at this. Like that's really what we want to confirm. To start off, it's like, okay, what is the market implying? And then what is the average move, right? If we see a difference there, there's a potential trade to be made. So what I'd recommend you guys do is, if you want to, take some notes during this video and break down 4 or 5 trades and spread your risk across all of them. So that way you're not all in on one stock. And if there is, a couple upsets and a couple winners, you average out. And because you're playing with this statistical edge in your favor, you should actually come out profitable over a larger number of trades, right? As you can see here, there's usually a pretty high risk premium with the price of the straddles, but it's looking pretty cheap today, right? There are scenarios where the market gets it wrong. This might be one of those. So for QGen, you could pick up a straddle here. I'd be more inclined to look for one that has maybe a better P&L historically, but overall it doesn't look bad. If we go to the vol trader, you can see there's some serious upside, downside skew. So if you think that the market, so what you could actually do here is, if you wanted to take a directional bet, you could actually skew it towards the upside if you think that this is actually going to be a good earnings release and you're going to see an increase in the price. Not a lot of action around this. So not a lot of retail traders are actually looking at this, is what I take from this. But the trade is looking pretty juicy. Trade looks pretty juicy. So what else do we got here? Let's look at Grubhub. Nice. So this is something that we like to see, right? We like to see this, right? So if you had been over the last 3 years buying options around Grubhub, around the earnings, buying volatility, you actually would have come out profitable, which means that the premium that the market is pricing in is undervalued, right? It's actually cheap. So this is actually a perfect little setup here. Okay, sorry guys, I'm gonna turn down my music a little bit. So what can we do here, right? Look, implied move is 10%. So the market is thinking that this thing is going to move up or down about 10% for the earnings event. But their average move, this is actually a company that moves a lot, right? It's a relatively young company. You know, it's in a growing tech space. So you see a lot of volatility. You see a lot of moves up or down, right? We had this one huge move here skewing it though, which makes me a little concerned, right? So this one, right, we had this one huge down move at the end of last year, huge down move, and that's a little worrying. But if that's not scaring you away, there's a decent opportunity here to buy volatility. That actually works in our favor, because if we got another move like that and we bought volatility, we'd be popping bottles of champagne. So Q2, we usually don't get the biggest moves. It's in line with the first 3 quarters. Fourth quarter is when they got that 40% move, and they typically have bigger moves. But if you look on average, even in the second quarter, they are having bigger moves than 10%. So, I'm pretty confident about this. I think that if you, you have a pretty good chance of success here if you were to buy options around this. So yeah, it looks pretty good. This is a pretty juicy trade, guys. I'll do one more on the long vol side, and then I'm going to switch over and look at a couple of other things. Because, one thing that you want to be doing as a trader is you want to be diversifying your risk, right? You want to be long where you should be long. You want to be short where you should be short. You want to be trading earnings. You want to be trading non-earnings, right? The more diversity you have in your portfolio, as long as everything has a positive expected value, the better off you're going to be, because then things are not correlated with each other. So for example, like there would be no point in going long 3 different oil ETF, 3 different oil stocks, or 3 different, communication stocks, because they all are impacted by the same industry. So they all exist within the same giant market. They're all impacted by the same industry. And then they all do similar things within that space. So they all sort of move together on a macro level. And the differences between the two is like, is that really the game you want to be playing when you're trying to grow your wealth for the long run? You want to probably be doing something a little bit different. So let's see here. Is there any trade that you guys want us to take a look at? Let's take a look at Eventbrite. Okay, little bit of edge here. Earnings not confirmed. Relatively young company. Buying vol has been profitable. You would have made 20% if you had started trading since they went public, which is, they're a pretty young company. 2019, it looks like they had their first earnings. Q2, we've only had really, really big moves in Q2. Not a huge sample size though. But, I wouldn't take a huge trade here. Limit your risk to 5%, but you could throw on a trade here if this is something you're looking at. Don't go all in on this book by any means though. So let's flip this around and take a look at a couple of the stocks that are having extremely overstated moves, right? So we're always looking for pricing of these options. And the way we price options is based on how much volatility or movement does the market think there will be within the time frame of that option for that stock. And since we're isolating the earnings event here, what we're really looking at is like, how much does the market think this stock is going to move because of their earnings, right? So that's this implied volatility number here. And then the average move is historically over the last 12 earnings events, how is it done? Now this forecast here, I'm sure some of you were wondering what the hell this number is. This number basically just tells us, what do we think the market will imply for the event? So this isn't our forecast for what will happen. This is our forecast for what the market will think. So we use this number leading up to earnings events. So if we're 2 weeks away from an event and we see an implied volatility of 3 or 4% and our forecast is 10%, we can buy options today, hold them into the earnings event, and sell them right before the event, hopefully narrowing the gap between the forecast and the implied move and capturing that spread. So let's look at two harbors. Wow, look at this. Look at how juicy this is, guys. Oh my goodness. Holy crap. So implied move of 13%. Average move, 1.5%. They're implying almost a 10 times the average move for this. The options are so expensive here, right? Let's see if there's any skew, right? You have a little bit of call skew and a ton of put skew. So this is a really good selling opportunity. If you obviously do some research before buying into this stock, because that is such a high move. It's like, I wonder what's going on there, what the market thinks is going to happen. But what you want to look for is, where is the surprise? Earnings, companies jump on earnings when there's a big surprise. If there's no surprise, there's no move, right? So you look at a company like Disney, right? We all knew that they were going to have lower earnings, right? You look at a company like, ATVI and all these other ones that came out today. We made a killing on these. We made probably 100% on our trades overnight, because everyone thought there was going to be these big moves because of these bad or good numbers. And when those numbers happened, the company didn't move, and everyone's sitting there holding the bag going, what the hell happened here? But what happened was, we knew those moves were coming. So the market tries to anticipate what's going to happen in the future. And if there's not a lot of uncertainty, if we know what's going to happen, don't expect a big move on the earnings. And what you actually want to do is say, what are the companies that they're still implying a big move, and sell volatility around them. So this tool, what I really do here is I'm filtering for opportunities, right? This is a quantitative approach to filtering trades. Okay, guys, I see you have a couple comments there. Right after this trade, I'm going to actually hop right into the two that you want us to do. If you guys have any more you want me to do, drop them in there. I'll be happy to do them. But look at this, right? Historically, buying vol, garbage. Nobody wants to be buying vol around this thing. And now the market's implying this move. And if we look at the distribution of moves, we've never, like one time we've seen a move of this size. One time it moved 18%. And besides that, nothing, no moves at all. Q2, small moves all the time. Look at this. Tiny, tiny moves. Look at that ugly box. Tiny little box down at the bottom here. So we could totally be selling volatility here, right? If you can find liquidity for this thing, right? It's a really cheap stock, right? So it might be hard to find liquidity. But the move is big. So, try to take a look at it, but you may have a bit of trouble just because of the size of the stock. One more here, EPR. All right, let's go to one a little bit bigger. I didn't realize the price of that when I looked. Sorry, guys. Another one, right? Bad to buy vol here. Extremely, extremely overpriced. 4 times the move is implied. Like, that's crazy. What is going to happen to this stock in the next 24 hours that's going to cause it to move 10% when it never moves, it never moves that much in general? It never moves that much around earnings, right? The biggest move we've seen is 7.2%. Why is it going to move 9 to 10% tomorrow? So once again, I'm inclined to look at selling volatility here, right? Like, if we were to go to the vol trader, what do we got here? Right? Like, look at this. Look at this skew, right? Realized volatility has been outpacing the implied volatility, but for the event, like, that's just such a big move that, guys, honestly, go sell vol here. Spread your risk, do it right, but it's worth looking at. So Siddharth wants to take a look at Lyft. He's looking at a directional bet to the downside. Are you going to be doing like a directional fly, or are you just looking to buy the puts? What are you doing there? Okay, Lyft, right? So one thing that we always got to be cautious of with Lyft is, yes, the moves haven't been big historically, but there's not a huge sample size, right? So obviously with Lyft, like, the earnings are going to be bad most likely. Like, I don't know how many people are taking Ubers. I used to take Ubers all the time, or Lyfts, or whatever one is out there. I haven't taken one in a long, long time. I don't know if Lyft has any sort of food delivery service either. So you should look at what the market is implying and how certain the market is about what's going to happen. Take a look at the analyst opinions and go, okay, like, how much agreement is there as to how bad these earnings are going to be, right? The odds are they're not going to be great. If they say that the earnings are going, everyone agrees that they're going to be really bad, you shouldn't see a massive move. But if everyone says that the earnings, they're unsure, then it would be worth taking that directional bet, right? Like depending on how you structure it, of course. Unbalanced put fly. Okay, perfect. Yeah, man, go for it. Honestly, like, I would go for it. Keep your risk small. I wouldn't go all in on this baby by any chance, but not a bad trade. I'd go for it. Hans, what are you looking at there, man? Iron fly short vol on MYOK. Isn't that one we just traded? Didn't we just trade that one? We did an earnings trade on that. Was it you, Siddharth? I think it was actually you who did it. Okay, non-earnings. So why is the volatility so high for this thing? What is this stock actually? What is this? Okay. We've been getting a lot of moves. Wow, look at how volatile this thing is. Holy. You know, with this level of volatility, are they looking at getting bought out or anything? Like, what's the news around this thing? Do we have any idea, guys? Options traders betting on a big move. Looks like it. Implied volatility is through the roof. Absolutely insane. Yeah, like with that level of implied volatility, if there's nothing really going on and this is just retail demand driving it, sell that all day, man. Sell that all day. Like obviously there's chances you'll be wrong once in a while. Oh, nice, Siddharth. That's really good. You know, but this level of volatility is nuts, right? Like this thing's, they're basically saying it either blows up or triples in price in the next year. Like what the hell are these guys implying, right? We actually can see here, there's a bit of an uptick in the near dated calls, which is always a good sign, right? So if we go to StockTwits and we type it in, let's see what we got here. Let's see what we got going on. Yeah, I bet we're going to have huge sentiment here, right? Lots of bullish people. Let's see. 100% bullish. Dude, what the hell's going on here? Right? How can you comfortably buy a stock knowing that 100% of the people at your level of trading think it's going to go up? Right? And you know, like things that I like to look for, you know, I like to see things like this, you know, like people roasting the short covers, or, you know, roasting the, you know, calling them vultures, telling people to stay strong, because those are signs of people who are extremely loss averse. They're holding on to a bag and they can't afford to lose anymore. And they're just hoping for the best. And usually when I see stuff like that, I'm more inclined to actually sell volatility here, because you got to, like, remember guys, something that we talked about in the group, like for Siddharth and Hans there, is like when you look at psychology as a trader, it's not about your own psychology. You should have that shit covered before you ever come to the table. What it's really about is, can you look out into the market and apply psychology out there, right? So when I look at a company like this, what I start to see is severe loss aversion, right? Everyone's 100% bullish. They think this thing's going to the moon, right? Let's see how it's moved historically. Let's look at the price chart. Right? So it's been all over the place. You know, if they bought down here, really happy for them. Hopefully they get out. That's a lot of volatility, guys. That's a lot of volatility. Like if you guys are trading, if you're buying options around this thing, you're paying an arm and a leg, and it's just not been moving as much as what the options are worth. So yeah, Hans, looks like a good trade. Looks like a pretty good trade, man. IVOL has been bigger than RVOL for a couple weeks now, and let's see how that's moved together. Look at that. Look at that. What is going on here? RVOL is dropping and IVOL has been skyrocketing. Guys, is there something we're missing here? Am I not seeing something? Why is this happening? You know, the term structure shows it's expected to drop down like crazy in the future. But for right now, near dated options, I think it's a pretty clear sell. Siddharth, I'm interested to know, why did you close the position? Was it because you traded it leading up to earnings? I guess that would make sense if that was. Because like this still looks like a good hold. You know, holding a short vol position here, not bad at all. Let's see what's going on here. What do we got for the highest implied vols versus realized vols? Just give me a second here, guys. IV versus forecast. Man, text is so small on my screen. Guys, by the way, quick question. How's the music in the background? How loud is it? I'm trying to really judge it. I want to add a little bit more flavor to the live. And how's my screen? Are you able to read the text on my screen? Would appreciate the feedback, guys. Let's see here. PTLA. Let's look at this. Wow. RV has been crazy compared to IV on this. Look at this. At the money, so cheap. Further out of the money you go, gets crazy expensive. How's these been moving together? Let's see. What is going on here? RV just took a dump recently, and RV just shot up through the roof. That's crazy. Relative action, 10 out of 10. PTLA, let's take a look. See what's going on here. Sentiment, 95% bullish. Love to see it. Message volume has been going up. Increase in watchers too. 6,000 watchers. It's not tiny. It's not tiny at all. You know, looking ready to fly. Patience is a virtue. Love to see these things. You know, it's just there's no predictive power in having patience. Yeah, sure, it's an important part of the game, but we're trying to forecast here. All right, options is a tricky game, guys. Okay, so yeah, great long vol opportunity. I don't know if it's going up or down, so I would just buy an at the money straddle. Looks pretty cheap. You could buy it short dated. You could buy it, 30 days out. I would probably buy this 30 days out, and then I would hold until this spread starts to close. So that would be the trade that I would make here. Yeah, exactly. It is a little bit shady, right? Like Siddharth's saying, it seemed a bit shady that the R vol kept reducing and the I vol was increasing on MYOK. So got out. Yeah, no, I get you, man. I get you. If something doesn't feel right, exit the position. Glad you made off with a nice profit there. What's the big news today, guys? What's some big stocks that people are looking at? Let's have a look here, right? Obviously, Disney was up there. STNG, this is one that I've been looking at for a bit. Had some words with some guys about it. I don't know what's going to go on with this one, man. They got earnings. Coming out. I believe this is confirmed for the 7th or the 6th. It might be today, actually, now. I don't know why it hasn't updated here. But look at this. Historical straddle P&L, really bad. It usually sees a little bit of an up move on the earnings. The implied move is just nuts. 18.45%, 5.6 average. Not bad, guys. Not a bad short vol, right? We if we look down here though, we actually do get our biggest seasonal moves in Q2. Could have something to do with the industry they're in. They're in the oil space. They hold they're a bunch of oil tankers and stuff. But yeah, looks pretty juicy. I'd be taking a position on it. Even it shot up way past our forecast. Average move is way smaller. Historically, it's really shit to hold volatility. We look at our distribution of moves. If we're going to get a really big move, like 18%, I don't even think we've seen an 18% move ever on this thing. The reason that people are implying this size of a move for this stock right now is because they're holding a bunch of oil offshore right now, and they're getting paid a premium for holding that. But we all know that. We all know it. So like, where's the edge coming from there? Yeah, guys, so that's what I got. Just wanted to break down a few trades this morning for you. Let's have a look at the overall market. The variance premium has been coming down slightly. VIX is floating at just over 30. Not bad. Look, VIX futures are a little bit wonky right now. Might be swapping up on us. Market skew. There's a lot of upside skew right now, actually. So, a lot of people betting on the market going up. We're in an interesting time here, guys, because I don't know what's going on. I think we're about to enter a period of a lot more volatility. We'll see what happens. But, it's interesting times. Like, the market's never done this before. So it's a really fun time to be a volatility trader. Really fun time to be involved in options. If you guys have any questions, shoot me a DM on either StockTwits or on Instagram. Be happy to get back to you. And yeah, we're going to call it there for today if there's no more questions. We'll give it 30 seconds here just to see what you guys are, if you guys have any. Bump some tunes. Okay, guys. So yeah, we're going to call it there. If you don't mind, drop a like on the video just so that, anybody who, we can help ourselves out on the rankings here, maybe get some more viewers in next time. I'm glad that you guys are here. Let's try to get more people involved because then we get more questions, more ideas on the table. We can break them down. And I'll see you guys on the next live tomorrow morning. Peace out.